Life insurance in Farrell, Pennsylvania. Term life insurance is the most common form of life insurance. The policy is taken out over a specific time length with premiums paid out each over this period. If you die within this period, then a lump sum is paid out. If you come to the end of the term and you are still alive, then your cover stops. This type of insurance is popular because although it doesn't guarantee payout, it is relatively cheap. Whole life insurance does exactly as it says by insuring you until you die. Premiums are paid until you die, at which time a lump sum is paid out. This type of life insurance guarantees a payout, but it does cost a lot more money than term life insurance. Many people get confused when they hear the terms life insurance and life assurance mentioned and want to know the difference between them. Simply put, there is no difference. Life insurance and life assurance are two terms for the same thing. If you were offered a life assurance policy, this is basically life insurance under another name. The term qualifying policy refers to life insurance that pays out a tax-free sum. If you see this term used or offered, it means that when you die, your policy will pay out a lump sum that your family will not have to pay tax on. This obviously depends on the payout amount and eligibility, but if you can get a qualifying policy, you should do so. When people hear the term estate, they might think you mean an actual property or estate. However, in life insurance, the term simply refers to the total assets that an individual has. This can be worked out by subtracting any debts from the value of savings and properties. When you die, your estate is how much you leave behind in monetary value. If you are in the process of churning, this means you are surrendering one life insurance policy and then taking out another one. If possible, you should try and avoid this because it will mean that you lose money, as any money you have already paid to one policy will have been wasted and you will need to start all over again. Some life insurance policies offer a clause that means if you can no longer pay your premiums, then they will be covered for you for a length of time. This means that should you fall ill or into financial difficulties, your cover will remain and you won't lose out all the money you put into the policy. Although this feature can be useful, it is likely to mean your premiums will be higher. Make sure that you only sign up for clauses that you really need. This will allow you to find the best policy for your needs.